Good morning, Paul Georgie from Allendale. It's June 11th, Tuesday morning, and grain markets this morning are basically in a narrow trading range. A little bit of short covering here overnight, but the USDA report yesterday afternoon on planted progress, 95% done on corn. Not anything real exciting. Trade was expecting about that. The takeaway from it, however, is that we got 3.4 million acres of corn to plant in the major corn producing states. So some of that's going to be planted, some of it's going to go to prevent plant, and some will be moved to soybeans. Soybean planting only 71% complete, well behind the 87% normal. So a concern there and a reason for some firmness in the soybean complex. However, with the corn delaying corn planting, the expectations of larger bean acres is offsetting some of that. The weather forecast, not much change. Continue to have rain systems track across the Midwest here over the next couple of weeks. There may be some open spots that producers will be able to get in the field and get some the soybeans planted and finish up on corn, but looks to be not an easy task for finishing up this planting season. Other news, Bank of Japan decided to not extend its stimulus package, which has caused some weakness in the dollar and some pressure in the metals markets here this morning. China markets are closed through Wednesday, so we're not getting any news out of there. The news that we've got ahead of us here is the USDA supply demand report tomorrow morning at 11 o'clock. Trade is pretty much not looking for much change in the old crop old crop ending stocks, but the new crop ending stocks is where the expectations come, in that the USDA will lower corn ending stocks for new crop. However, our Rich Nelson did some research yesterday, and it's very possible that they may not lower planted acres at all. They may not change yield very much on this report, because they'll wait until the June 28th report, where we get the actual planted acreage numbers, and then start making adjustments in July. So we'll have to watch that, and that'll definitely create some volatility tomorrow at around 11 o'clock when the USDA report comes out. We also did a survey, just one question on our wake-up call. Our readers answered the question of where would they sell soybeans. Over 50 or around 50% of our readers said they'd start selling soybeans at around 14.5. Another 15% said they'd start selling beans when they got up to the $15.50 range. So some friendly attitude out there, I guess, is what you can take away from that question. The other news, Senate did pass a farm bill. It goes to the House now. Expected to be a battle there, because the cut in food stamps by the Senate was not nearly as much as what the House wants to have cut in the food stamps. So that could cause some delay there. The hope is still that we will have a farm bill before the July 4th holiday. In the livestock trade, choice beef up 159, select up 7 cents. Pork cutout values were up 141. The pork and the lean hog futures have gone parabolic here in the last few days due to fund buying, technical buying, ideas that we will export more pork to China, and because of tight hog supply. So all of these factors continue to drive this nearby hog contracts sharply higher. Our advice there is trade with caution, because something that goes up that fast usually has a correction, and be careful about positioning yourself there without proper risk management. If you got any questions, give us a call, 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning.